Do heirs pay tax when they sell an inherited vacation home? Yes. Heirs can owe capital gains tax when they sell an inherited vacation home, but stepped-up basis often limits the taxable gain when the sale price is close to the property's date-of-death value. I'm Rhett Fruitman, co-founder of Inherited Property Match. My background includes Citi Private Bank, CBRE, and helping families navigate inherited property sales across the country. This is general information, not tax, legal, financial, or real estate advice. Before you sell inherited property, speak with a CPA, and when probate or trust administration is involved, an estate or probate attorney. What decision should the family make before talking numbers? The family should choose a direction first: sell the home, keep it, rent it, or let one heir buy out the others. A vacation home is harder than a normal inherited house because it usually has memories attached, ongoing carrying costs, and more than one heir with a different idea of what should happen next. If one heir wants to keep an inherited beach house, lake house, ski cabin, mountain cabin, or condo, start with fair market value and written buyout terms. The emotional answer and the financial answer are not always the same. Does the Section 121 home sale exclusion apply? A vacation home usually does not qualify for the Section 121 home sale exclusion when heirs sell soon after death, because it usually is not the heir's principal residence. As of 2026, Section 121 may exclude up to $250,000 of gain for an individual, or $500,000 for some married couples filing jointly, but the property must meet the ownership and use rules for a main home. For most inherited vacation homes, the bigger tax rule is not Section 121. It is Section 1041, the stepped-up basis rule. How does stepped-up basis work for an inherited vacation home? Stepped-up basis means the inherited home's tax basis is usually reset to fair market value on the date of death, or to an alternate valuation date if the estate validly elects one. For example, if the vacation home was worth $800,000 at death and sells for $810,000, the taxable gain may be based on the $10,000 difference, not the original purchase price from decades ago. Heirs should get a professional date-of-death appraisal when the tax basis matters. A broker price opinion can help with pricing, but ask a CPA before relying on it as a tax record. If there is a sale to report, heirs generally use Form 8949 and Schedule D, and state tax may also apply. How does rental or mixed use change the tax picture? Rental use can create extra tax issues because rental income, depreciation, personal use, and expense limits may all matter. Ask 3 questions. Was the home only used by family? Was it rented on Airbnb or VRBO? Or was it mixed use, partly personal, partly rental? If it was mixed use, ask your CPA about the 14-day or 10% personal use rule for vacation property. If the estate, trust, or heirs claim depreciation after death, that depreciation can reduce basis and can create depreciation-related gain when the property is sold. If the estate or trust collected rent, Form 1041 and Schedule K-1 may be involved. If the property was already distributed to the heirs, reporting may move to the heirs' individual returns. Rental or business use sales may also involve Form 4797. Can heirs use a 1031 exchange for an inherited vacation home? A 1031 exchange may work only if the inherited property is held for investment or business use. A personal use vacation home or a second home usually does not qualify. As of 2026, a deferred 1031 exchange generally requires replacement property to be identified within 45 days and received within 180 days, and a qualified intermediary should be in place before closing. This is not something to decide after the sale. If the home was really a family retreat, a 1031 exchange is usually not the answer. If it was a true rental or investment property, discuss Form 8824 and exchange timing with a CPA and 1031 intermediary before signing a sale contract. Who has authority to sell the inherited vacation home? The right seller must have legal authority before the vacation home can be listed, contracted, or transferred. Depending on title and state law, the seller may be an executor, administrator, personal representative, successor trustee, surviving joint owner, transfer on death beneficiary, or all heirs acting together. If the vacation home is in a different state from where the owner lived, heirs may need ancillary probate or another local title process before closing. Before listing, check the deed, probate or trust authority, mortgage, liens, property taxes, HOA or condo documents, transfer fees, special assessments, and insurance. A title company and estate attorney should catch issues before a buyer is already waiting. What should heirs do before they list the property? Before listing, heirs should compare the real carrying costs with the likely sale value and confirm the vacation market details that normal inherited homes do not have. Add up property taxes, insurance, HOA dues, utilities, maintenance, property management, repairs, travel, and cleaning. Then check short-term rental permits, future bookings, Airbnb or VRBO calendars, property manager contracts, vacant home coverage, flood insurance, wildfire risk, hurricane exposure, furnishings, and personal property. Beach houses, ski cabins, lake houses, mountain homes, and resort condos all have different buyer pools and seasonal timing. A local broker who understands estate-related sales and vacation markets can help the family avoid underpricing, bad timing, and preventable delays. What is the best takeaway for heirs? The best takeaway is that selling an inherited vacation home is part tax decision, part legal process, and part family negotiation. Do not let one heir's pressure set the plan before the family has fair market value, tax basis, title authority, rental history, carrying costs, and a written decision path. If you inherited a vacation home and need help finding a broker who understands estate-related sales, Inherited Property Match can connect you with a vetted broker experienced with inherited property. The match is free